Bitcoin comes in at 57K, breaking what I think might be a pattern that has been forming since ancient times on the blockchain. We'll break it all down for you today. My name is Paul Barrow. Welcome back into Tech Path. All right, a couple of things. If you're holding Bitcoin right now and you want to put it in a long-term crypto IRA, you can do that with iTrust Capital. All you have to do is jump over to itrustcapital.com and you can do all your self-funded IRA activities right there in the app. One thing you do get is a $100 funding reward if you guys use our link down below. So make sure and use our code down below. Just as a reminder also for some of you guys, I know many people kind of complain about the ads sometimes, but there's some AI ads floating around out there. So be very cautious about some of these things about saying they're going to give you free tokens, plug your wallet in here. Don't do any of that stuff. Watch it. Always expect something like that is most likely a scam. Let's go into a couple of things here today. Of course, everybody knows Bitcoin hitting 57K as we are filming this. And the question is whether or not Bitcoin is going to move into its all-time high before the halving. Now, we got a lineup of clips and also, I think, some good analysis on maybe, is there something here waiting in the wings? You want to stick around toward the end of the video, we'll break that down. All right, so here was Wu Blockchain talking about it past 24, Bitcoin rose 10, exceeding 57, ETH rose 4, exceeding 32. CoinGlass data shows in the past 24, 285 million was liquidated, 211 million for short orders alone. I mean, these shorts are just literally getting their shorts pulled down. This is crazy. It is not good for the shorts out there. It might be one of the significant validators, I think, of where Bitcoin has gone in the last week, for sure. A couple other things to be aware of. Spot Bitcoin ETFs accumulate 300,000 Bitcoin as net inflow rises to 6 billion. This is not stopping. It's like a locomotive coming down the track with these ETFs. Now the market cap has breached 1.1 trillion. Last time we saw that, not too soon. I mean, that's been a while since we've really seen these kind of numbers as 57K starts to roll in. A couple other things in the article. ETFs also recorded their highest trading volume with 2.4 billion, beating the prior record of 2.2 set on January 11th. So I don't know. Do you guys think this is going to slow down from an ETF standpoint? You look at the flow. Has it just been one of those things where the pent-up demand is in place and now the ETFs have kind of just uncorked this new market? Because institutions are really where this is coming from. A lot of individual investment managers are moving into this. And here was Will Clemente talking about it. Fidelity now recommending 1 to 3 with 3% crypto allocation in your portfolio, gateway drug. What happens when that 1.3 goes to 3.6? I talked about this almost a month ago, I think, when the ETF first got launched. And one of the things that we have in some of our private groups, some of our special seminars, is investment advisors that were really looking at maybe it's more of a 5% allocation that they're trying to look at in crypto in general, not necessarily all Bitcoin, but ETH, et cetera. I'm just kind of curious how this is going to play out in these private markets going forward. Here's another tweet right here. This one's interesting to me. 4-year crypto cycle completely broken by ETF approval? Maybe. This price level shouldn't have arrived at least until the end of 2024. And yet here we are. This is worrying as it will be difficult to determine the end of the bull market, even for the OGs. So this is a caution, a word of warning that when you get these overheated markets, there are some things that can happen. You need to be on your toes right now. Do not step back and assume that this is a cycle like ones in the past. I've said it many times, is that I think with institutions, cause and effect, we may have that right now, especially if Bitcoin does get to its all-time high before a halving. The other option here is it goes a little bit neutral and gets very boring between now and halving. Love to get your opinion on that. Here's Eric Balchunas talking about JP Morgan. JP Morgan analysts just flipped their view on Bitcoin, Coinbase, and what they once called an underwhelming ETF flow. Of course, we know all of that has changed. I have a clip here from, I think you guys will like it, from Jamie Dimon, or on Jamie Dimon, I should say, with Anthony Scaramucci, where he's kind of in between a pet rock and a hard place. Listen in.
Well, I mean, the first thing I would say, though, and because I know Jamie does listen to your show, hopefully he catches this segment, I would just ask him to please do more homework, because people like Paul Tudor Jones or Stan Druckenmiller or somebody like Larry Fink, who's actually done the homework, were perhaps negative on Bitcoin prior to doing the homework. Andrew, it's a one-way ticket towards Bitcoin if you actually do the homework to fully understand the asset. But specifically, if you look at the last 14 years, you usually get a quadruple after a halving. And so Bitcoin right now is trading 57,000. I'm not sure where it'll be on or about April 20th when the halving actually takes place. But let's say it's at 50,000. That would imply over 18 months from the halving a $200,000 Bitcoin price. So.
All right, so you see Anthony Scaramucci, I mean, he's been on many times. And all of these guys have, in the past, and even myself, had kind of anticipated we would see 100K Bitcoin at some point. Now, granted, this cycle could be completely different in ways that we don't even understand. You have to really consider all the macro pressure that is continuing to put. But for this market to be performing the way it is right now, remember, there's a lot of heat up, and I'll talk about this in a second, around the stock market just because of the AI narrative. And I think that also plays into what's happening here going forward. If you look at the Wall Street cheat sheet, it's kind of interesting. Some people believe we might be in this zone right here. You can kind of see it. I'll zoom in on that for you guys a little bit. The optimism area, which is this rally is real. And I think that's the question mark. Are we there, or are we really in the hope a recovery is possible? Because remember, we're still in the phase of there still could be a recession. There still could be longer for higher. And all of those playing into that. If we don't see a Fed rate cut in May or June, those are the kind of scenarios that can put a damper on a market very quickly. This could completely get a weird retracement and then a push back into maybe another all-time high. This is going to be interesting to watch because this is a cycle I don't think anybody has really expected. Now, ETH, price up also, but I think a lot of people are still sleeping on Ethereum. And the reason is when you look at they talk about it, the psychological mark around 3,200, 3,300. Remember, ETH up in the high fours on its last all-time high. Couple of points to notice here. We're already seeing Bitcoin pre-halving rally tremendously impact money flow into ETH. And then now we see ETH rallying 43% this month. My question is, when will that trigger occur? Because typically, a lot of people will take gains. They typically reposition that into altcoins. That's what jettisons or creates the element of altcoin season. And also Ethereum. Ethereum continues to be a very strong player. Now, there's some narratives behind all of that that could play into this next big move. And that is all built on something called DePIN. Let me kind of zoom in on this right here. Did you know DePIN sector predicted to skyrocket to 3.5 trillion valuation by 2028, according to Masari Crypto? Now, granted, DePIN, we're going to drop a DePIN video that I think you guys will like here later this week that talks about this. We dive in with a founder around where decentralized physical infrastructure networks will go. There's a lot of tokens that we've talked about here, and one of the biggest ones, of course, you guys all know is Render, but there's others that are coming to market very soon. DePIN could be another narrative that really plays out in this altcoin cycle for sure. It's one that, and it's very related to AI, which I think is something that you have to really pay attention to overall, because AI in itself has a very interesting effect on the NASDAQ. Speaking of that, NASDAQ 100 added 1.6 trillion in market cap in 2024 thus far. That's crazy, 1.6 trillion. Here's the crazy part. Just 4 companies have accounted for a whopping 95% of the year-to-date market cap gain. That's NVIDIA, Meta, Microsoft, and Amazon, who have added a total of 1.5 trillion in the market cap in 2024. That, look at that, compared to the remaining part of the S&P 500 index. These are big numbers, and it is a lot of it is really leaning in on AI. Now, this could be the rug pull of rug pulls with AI. So there's a couple of analysts out there and some guys we talk about here on the show, like them, love them, hate them, but they have an interesting viewpoint. I want to go to this next clip by Chamath Palihapitiya. Listen in.
The bigger principle, and we've talked about this a lot, Jason, is that in capitalism, when you over-earn for enough of a time, what happens is competitors decide to try to compete away your earnings. In the case of NVIDIA, what you're now starting to see is them over-earn in a very massive way. So the real question is, who will step up to try to compete away those profits. The old Bezos quote, right? Your margin is my opportunity. At some point, all of this spend has to make money, right? Otherwise, you're going to look really foolish for having spent 20 and 30 and 40 billion dollars. So if you look at this, like what you're talking about is, look, who is going to spend $22.1 billion? Well, you said it, Jason, it's all big tech. Why? Because they have that money on the balance sheet sitting idle. But when you spend $22 billion, their investors are going to demand a rate of return on that. The $64,000 question is, who in this last quarter is going to make $45 billion on that $22 billion of spend? And again, what I would tell you, to be really honest about this, is that what you're seeing is more about big companies muscling people around with their balance sheet and being able to go to NVIDIA and say, I will give you committed pre-purchases over the next 3 or 4 quarters, and less about, here is a product that I'm shipping that actually makes money, which I need enormous more compute resources for. And if you look in the past, what the past has showed you, it's the big guys don't really invent the new things that make a ton of money. It's the new guys.
So he hits on a lot of things that I think builds around the narrative of Bitcoin. And the reason is that to get into liquidity and go into a market that most likely will get more heated with retail entry, it's probably going to be people taking profits from things like NVIDIA, Meta, and other stocks out there that are repositioning that and recalibrating their portfolio, right? So when you look at that, and what Chamath is saying is that maybe this market, because it's going to have to at some point either show that they've been able to, generate profits from all this, NVIDIA chip buying. But the question will be, is there a next narrative that comes out of that, whether it's software or we do get some AI breakthroughs? Because these companies who are cash rich right now are figuring out, that's why you're seeing the NVIDIA numbers go so crazy. But it has such I think, a ripple effect across all financial markets, including crypto, especially crypto. And it may be one of the reasons that it is causing this movement within the ETF architecture of what's happening within crypto, which is driving the price of Bitcoin. So it's something to keep an eye on. If you look at this statement right here from Kobeisi letter, huge statement from Apollo this morning, current AI bubble is bigger than the 1990s tech bubble. This is a big statement. I was around. That was when I entered my years of tech. Was in the late 90s during .bomb, when we saw that overheated market and then an implosion. And it took 7-8 years for that market to recover. And then we had what was the biggest recession we've known until now. So those kind of things that play out here. And they talk about this, about what Apollo said, that the .com bubble was just a preview of what we're in right now. But we're very early. It's like, if you were around in 96, 97, you saw the birth of every .com you can imagine. Maybe that's what's happening with AI. Now, we may have this cycle over the next 2, 3, 4 quarters for NVIDIA. That's when it will be significant. The question for NVIDIA, which I think will still drive a lot of this narrative, is how does this play out for them as a hardware? Because remember, the infrastructure of the internet was built by companies like Cisco and Oracle from a database standpoint, and they became huge, but they're not the size of what we've seen with this NVIDIA move. Listen into this next clip right here from David Sachs.
Well, I think the question everyone's asking right now is, are these results sustainable? Can NVIDIA keep growing at these astounding rates? Will the build out continue? And the comparison everyone's making is to Cisco. And there's this chart that's been going around overlaying the NVIDIA stock price on the Cisco stock price. And you can see here the orange line is NVIDIA and the blue line is Cisco. And it's almost like a perfect match. Now, what happened is that at a similar point in the original build out of the internet, of the .com era, you had the market crash at the end of March of 2000. And Cisco never really recovered from that peak valuation.
All right, so I would kind of agree with what David's talking about there. I think that we're further back on that chart for AI than what he was showing there in comparison to Cisco. Cisco, if you don't know, I mean, they're basically the infrastructure of the internet. They run all of the, UU nets of the world. Everything you're plugged into from today's internet was really built by the Cisco companies, especially when you think about how data is moving. AI is the next one, and AI is going to start needing a lot more compute power. That's decentralized physical infrastructure network, which causes a lot of interesting things happening within the crypto markets, including projects like Render and many others that we've talked about here on the show. And there's a lot of gaming projects that also play into that. Remember, NVIDIA was a gaming GPU supplier that then started to understand where the real market growth came from, and that was AI. I think we're in for a very intriguing time in the next 12 months. All of this shadowed with the fact that we still have an election and we still have high interest rates. So the Fed still has to do their work. We got to get through an election, and we can't, get into any more wars. All of this is playing in while Bitcoin is at 57K. This is a very, very intriguing time. We'll see. We're going to cover it a lot deeper for you guys right here on the show. If you're not subscribed to the channel, do that right now. Make sure and like the video. That's another thing that we're finding. This is the way to get the algorithm out there. Let other people learn about this and kind of understand how they're going to get into the crypto space for the first time. Of course, if you're not following me on X, it's @PaulBaron. We'll catch you next time right here on TechPath.